Today on the Blockchain Report, Bitcoin sitting at 103K this morning, and it might be because the Democrats swept key races across the East Coast, and Trump just got a midterm message loud enough to interrupt his tea time. Wall Street warns of a global correction as Bitcoin officially enters a bear market, down 40% from its highs, proving even digital gold can get stage fright. And Dr. Phil loses his startup in bankruptcy court after deleting evidence, which means the only thing he's fixing now is liquidation value. All that and more right now on today's show. Let's go! Good morning and welcome back, my beautiful blockchain believers, to another episode of the Blockchain Report. I'm Hank Hudson, coming to you live from San Francisco, where the weather's chilly, the coffee's $8, and somehow Google's building data centers in space now. Okay. Now, for those of you keeping track at home, it is Wednesday, the day you realize you're halfway through the week, but your portfolio still thinks that it's Monday. And before we dive into today's ocean of price swings, protocol drama, and politicians pretending to understand technology, let's do the thing. Hit that subscribe button and make sure to follow RoxomTV, the Blockchain Report, and yours truly at Hank at RoxomTV, because if you're still getting your crypto analysis from the same influencers who sell shampoo and sadness on TikTok, well, you deserve what happens next. Now, it has been a wild 24 hours here. The Democrats swept Tuesday's elections, Trump's threatening tariffs big enough to make your grocery bill cry, and Google apparently decided that the cloud just wasn't big enough. So they're literally launching AI servers into orbit now, because when your chatbot starts asking for more RAM, send it to space, obviously. Meanwhile, Bitcoin dipped below six figures and traders are staring at that 100K mark like it's the last Pringle in the can. But hey, markets move, memes survive, and we are still here. So grab your coffee, check your leverage, and let's kick things off this morning with our market rundown, where we'll find out who's flying high, who's frying in the pan, and who's about to get margin called straight into orbit. Let's go. All right, sweet sassy molassy. Yesterday was a tough one. We saw the Bitcoin price go below that very big psychological 100K mark, but we're back today, up about 2.5%, right around that $103,000 mark. So things are looking a lot better than they were. If you remember yesterday, Twitter was melting down with Bitcoin is dead and all that usual stuff. But hey, we're back at it, showing that resiliency is still very much in the cards for BTC. And I want to break down what's going on a little bit further and take a step back from the chaos and check in on the data that actually matters here, okay? Because when everyone here is panicking and selling at the bottom or screaming, Bitcoin's dead for the 437th time, the charts usually are going to be telling a different story. So now we're going to get into our Bitcoin alpha, where we zoom out, we ignore all the noise, and actually use data instead of drama. So let's bring up our first chart here, guys. All right, so we're bringing up our first chart here this morning. Now, this one is our bear market corrections from all-time highs chart, all right? So let's get that going. So what this one shows here is in 2011, 2015, and 2018 and 2022, you can see all of the areas of our past drawdowns, okay? So how far the price dropped from its all-time highs during each bear market. So you can see in 2011, 92.7%, ouch. 2015, 84.5%, also ouch. 2018, 83, and 2022, we had a 76.7% drawdown. So all pretty substantial here, right? These are pretty big drawbacks. Now notice how these drawdowns are actually getting a little smaller each cycle, right? So we had 92, then we came up, and then we have it there at 84, 85, then we have 83, then we have 76.7. What we're seeing here is Bitcoin maturing in real time. There's a bigger market, more liquidity, and fewer weak hands panic selling at the first red candle. Now, if the recent top really was the cycle high, which isn't confirmed, this would be the most muted peak to trough correction we've ever seen in Bitcoin. So if that were the case, the next bear market probably wouldn't be as violent as those previously, all right? So historically, with blow-off tops, we see around a 50 to 70% drawdown. Without one, it's something closer to 30, 35%. So 50 to 70, 55 to 75 would be about here to here is where we could expect the drawdown if we had already seen a blow-off top. But we haven't. So the drawdown we might be anticipating could very likely be in this 35 to 55 arena instead, all right? So right over here. Now that puts potential downside somewhere between the 50K region and the high 80K region. Not exactly fun, but also not catastrophic compared to what we've seen from Bitcoin's past. So let's go to the next chart here, okay, gang? So the next chart we're looking at, this is the short-term holder or SPOPR indicator. All right, so this one sounds a little complicated, and it looks complicated too, but it's actually really not. The SOPR just measures whether short-term holders, meaning people who have held Bitcoin for less than about 155 days, are selling at a profit or if they're selling at a loss. Now, when the SOPR drops below 1, okay, that's our 1 right there, you can see, all right, that means they're selling at a loss. And right now, they very much are. In fact, you can see right here, each of these loss selling events are getting smaller. So we have a loss selling event here, got another one here, and right here. But you can see they are trending upwards. They're getting smaller. That's exactly what you see in a normal bull market dip, okay? People panic, they sell low, but the price recovers and then repeat, all right? Nothing in this chart is screaming bear market right now. This is just screaming shaken retail. Retail investors get a little freaked out by a price dip, and then they start selling, and the charts are reflecting that right now. And now we're going to our third chart here, all right? So this last one we're checking out is, of course, the fear and greed index chart. Very, very scary. So right now, you can see we're sitting at a score of 23 out of 100. We are very firmly in the extreme fear category right now. People are running in the streets. They're yelling Bitcoin is dead. There is blood on the streets and everybody's freaking out, okay? But historically, this extreme fear level we're seeing, 25 below, is historically where the bottoms form, okay? So every time sentiment has looked like this, we're talking orange, fearful, of course, very dramatic, that's when long-term players are quietly loading up their bags, okay? So it doesn't mean that the price can't dip further, it just means that the crowd's emotion is the opposite of what seasoned investors are currently doing. Or as the saying goes, markets peak in greed and bottom in fear, and right now this chart's basically one big panic emoji, right? And take a look at this chart here again. So you see all these little trips we've taken into the extreme fear zones, here. Almost all of these are immediately followed by a significant upside, right? So right now, we are not in the midst of a bear market. This is just a healthy correction during a bull market that, if the past rhymes is any indication, we should be seeing some more upside in the not too distant future, which can be symbolized here by this little yellow arrow that I wrote, all right? So what is the overall message? What are we actually saying from these charts today? Well, short term, it is very possible we could see some more pain. But in the midterm, the structure's still looking pretty good, okay? And in the long term, Bitcoin is doing exactly what Bitcoin does. It's shaking out the tourist before the next big leg up. So unless something fundamentally breaks, the show is very much going on, and that is our Bitcoin Alpha for the day. So we're gonna take a quick break here, but when we're back, we're gonna get going with today's top stories in our bull run, so stay tuned. There are some wild ones that you are not gonna wanna miss. We'll catch you right after this break. All right, welcome back to more of this morning's blockchain report. We're getting started with our bull run where we recap the top stories of the day. So let's get into it, because this morning Democrats everywhere are celebrating. The left scored a clean sweep across the East Coast in last night's election, a political version of revenge is best, but served blue. In Virginia, former CIA officer Abigail Spanberger cruised to victory. In New Jersey, Mikey Sherrill broke apart the GOP coalition. And in New York City, Democratic Socialist Zoran Mamdani defeated Andrew Cuomo again. Now, first in the primary, then in the general. Now, at this point, Cuomo's political comeback is starting to look like a reboot that literally nobody asked for. Even Trump's attempt to help backfire was impressive. He publicly endorsed Cuomo, saying, if it's between a bad Democrat and a communist, I'll pick the bad Democrat. Apparently, voters picked neither. In California, Gavin Newsom pushed through a redistricting measure that hands Democrats 5 more friendly House districts, a move that was done in Texas to gain more Republican seats for that red state. Meanwhile, in Pennsylvania, Democrats kept their state Supreme Court majority intact, ensuring the next few election lawsuits will be fought on home turf. Across the board, Democrats focused on affordability, not ideology, proving that whether you're a centrist or a socialist, nothing brings people together like the cost of groceries. Even Alexandria Ocasio-Cortez celebrated from Mamdani's victory party, saying Americans are appalled by what they're seeing out of this administration, which is probably the only bipartisan statement of the night. Now, the big takeaway here, whether you're in a Manhattan high-rise or a Virginia cul-de-sac, voters just sent Trump a message loud enough to pierce the Mar-a-Lago golf course playlist. And in his victory speech, New York City's new mayor, Zohran Mamdani, didn't waste time taking a shot directly at President Donald Trump. Mamdani said New York will remain a city built by immigrants, powered by immigrants, and now led by an immigrant. And he's not wrong. The guy literally beat Trump in the city that made Trump famous. Now, Donald Trump had spent months threatening to defund the city or even take it over if Mamdani won, which is definitely a normal thing for a sitting president to say in a democracy. Even former Governor Andrew Cuomo warned that if Mamdani won, it would be Mayor Trump running New York City by proxy. But voters didn't buy it. They went for the 32-year-old socialist with a better slogan and way better TikTok energy. Mamdani's rise has been compared to Trump's, in fact, an outsider riding populist momentum, commanding attention, and promising to shake things up. The difference here? Trump descended a golden escalator. Mamdani? He took the subway. The president has already tried blocking city infrastructure projects, canceling tunnel funding, and cutting migrant aid, and that was before Mamdani even won. Now that he's the mayor, expect the next few years to look like a political cage match between Trump Tower and City Hall. And Bitcoin has officially entered a bear market, down more than 20% from its October high of 126K, and apparently dragging the rest of the financial world down with it for emotional support. After 7 straight years of Uptober, this October decided to be the exception. The month Bitcoin reminded everyone it can still ruin your mood and your portfolio at the same time. The sell-off coincided with a broader meltdown in risk assets after CEOs of Goldman Sachs and Morgan Stanley, 2 men who can crash markets with literally a sentence, warned that stocks could fall 10 to 20% in the next year or two. Almost immediately, markets across Asia and Europe tanked. U.S. futures followed suit, with the S&P 500 and the NASDAQ both in the red before the opening bell. And as Wall Street panicked, Bitcoin looked like it was auditioning for the role of canary in the coal mine. Goldman CEO said a 10 to 20% equities drawdown was likely. The timing couldn't have been worse for BTC. Just weeks earlier, a historic $19 to $30 billion liquidation wiped out long positions across exchanges in a single day, the largest in Bitcoin history. And that's not a correction, my friends. We call that an exorcism. Now, analysts say the market still hasn't recovered, with up to $11 billion in liquidations waiting to trigger if prices move 10% in either direction. So, yeah, the entire market is basically a Jenga tower made of leverage now. Super fun for everybody. Next up, and now after Bitcoin plunged below $100,000 yesterday, a level we haven't seen since June, traders are now staring at that 6-figure mark like it's the floor of a glass elevator that just cracked. But what was the trigger to all of this, right? Well, a $213 million Bitcoin transfer from none other than BlackRock, because apparently nothing sends the market into a panic quite like watching the world's largest asset manager move a few billionaires' lunch money around. According to the on-chain data, BlackRock shifted over 2,000 Bitcoin and another $80 million worth of Ethereum to Coinbase in the early U.S. session. And when big players like this move funds to exchanges, it's often a sign that they're either taking profits or rebalancing portfolios, which is trader talk for we might sell, we might not, but you're all going to panic anyway. Crypto analyst Kyle Dupe summed up the market mood nicely on X by saying, last time they did this, the market dipped soon thereafter. Or in other words, deja vu, but let's make it bearish. Now, to make matters worse, both Bitcoin and Ethereum ETFs have seen outflows for 4 straight trading days. According to Dan Crypto Trades, these outflows are compounding the heavy selling pressure from OG whales, which is a polite way of saying the guys who've been here since Mt. Gox are finally cashing out. Now, he also noted that while ETF outflows usually lag behind sentiment, the pattern tends to rhyme. Big outflows near a bottom, big inflows near a top. So ironically, if everyone's bailing, it might actually mean the bottom's already in. Or in other words, the market might be fine once it's done freaking out about, being fine. ETF analyst Eric Balkunas called the current slowdown valuation angst, pointing out that the S&P 5 is up over 80% since 2022, so a little cooling off was bound to happen. He compared Bitcoin's reaction to an animal sensing a rogue wave, meaning it sniffed the pullback early, played dead before, stocks ended up following. So while retail traders are bracing for sub 100K Bitcoin, analysts are saying this could be the classic calm before the next big leg up. Because if we've learned anything, it's that when Wall Street rebalances, regular investors tend to get a little dizzy. And the Supreme Court, well, they're about to decide whether President Trump's global tariffs are legal or if the U.S. economy's been running on vibes and executive orders. The case centers on Trump's steep import levies, including a baseline 10% tariff on nearly all imports, plus extra taxes on China, Mexico, and Canada. The White House calls it a liberation day. Most Americans just call it, why is everything so much more expensive now? Now, if the court upholds Trump's authority, presidents could have a permanent new weapon, unilateral control over tariffs, aka taxes, without Congress. Now, if they strike it down, we could see $90 billion in tariff revenue refunded, or what some economists might call the stimulus sequel. Trump says if he loses, it'll leave the U.S. a weakened, troubled financial mess, which is definitely a subtle way of saying, vote my way or the economy gets it. Now, tariffs have already pushed the average rates to 17.9%, the highest since 1934. Inflation's ticked up to 3%, and the average U.S. household is paying about $1,800 more a year thanks to import markups. Now, Federal Reserve Chair Jerome Powell says the tariffs are pushing up prices, but expects the effect to be temporary, which is Fed speak for we're really praying that it's temporary. Now, economists warn that if the court upholds Trump's tariffs, inflation could climb again and hiring could slow, setting up a delightful little combo known as stagflation. Others say even if the courts strike down the tariffs, the administration can reimpose them under different laws. Because when it comes to tariffs, Washington treats illegal more like optional. Trump's team insists the tariffs are part of America First economic policies that have sparked trillions in new investments. Economists call that debatable, but everyone else is just calling it Tuesday at this point. Bottom line here is the Supreme Court's decision could reshape how presidents control trade, prices, and inflation itself. And depending on the ruling, your next iPhone might cost a little more or a lot more. We're taking a quick break, but when we're back, more of today's top stories in just a bit. We're going to have 2 special guests joining us for today's show, so stay tuned. More Blockchain Report coming your way after this.
Others, Bubble Boy. I'm a bit changed. This sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. And the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card. You can buy your lunch, your gas, your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight into your account. All that with no annual fee. And right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. All right, let's see what's going on in the world of the RoxomTV Twitter page. If you haven't already, gang, this is the #1 place to see what's going on in the world and how that is affecting your finances, specifically your Bitcoin stack. So let's go through and see what kind of breaking news we got going on this morning on the RoxomTV page. All right, let's scroll down here. First, we got Bitwise CIO Matt Hogan says Bitcoin's bottom is in. Well, we can't hear the video, but this is no surprise. Remember, Matt Hogan has been calling for Bitcoin. I forgot what his price prediction was, but it was at least over 150. And he's also been in the camp of saying that the 4-year halving cycle is dead and our road for Bitcoin going forward is just a slow, long march up and to the right. This would actually be your guys' right. There we go. So Matt Hogan, we love you. Got to have you back on the show soon. Let's scroll down a little more. Now, we touched on this one earlier. What we have is the Bitcoin fear and greed index chart. Okay, so if we could blow that one up here on that screen here, guys, because what you'll see is Bitcoin has rallied every single time that the fear and greed index has reached extreme fear levels. So if you look at that chart here, remember we're at 23 right now. 25 and below is the extreme fear category. All right, so right now, if history rhymes, and you can see on the page here, every time we've hit that extreme fear level, that is when Bitcoin has bottomed, and we'll see it shoot up. And you can see that happen in 2014, or in 2024 and 2025 this year. So that is something we want to keep an eye on. Sentiment means so much in the market, specifically too in the Bitcoin market. And right now, sentiment is not great, which usually means we are due for some upside in the not distant future. Let's scroll down here a little further here, guys. Right beneath it, we see President Trump says the stock market will hit many more record highs. Yeah, it's lip service from the president. We've seen that before. We scroll down a little further here. We have China confirmed a temporary suspension of a 24% tariff on select U.S. imports while maintaining a 10% levy, signaling partial trade de-escalation. This has really been the big story here of the last couple of weeks, gang. You have the two world's preeminent superpowers arguing like a couple of schoolgirls fighting over a trapper keeper or something, right? Do kids even have trapper keepers anymore? I don't know. But either way, we're finally getting some clarity and some de-escalation on the part of these crazy trade wars that have just been ringing or taking our economy through an absolute seesaw of emotions, especially in the last couple of weeks and months as Trump started giving everybody tariffs. So if we can get this settled down, I definitely expect to see some more calmer seas in the markets and a lot of the downside that we've seen in the last couple of weeks kind of turn into some more upside rebound. Because remember, when Trump came out just three and a half weeks ago with the tariff threats against China, we saw the Bitcoin price go from 124, 125 down to 102, and what I think was a matter of hours. So once we get this settled, there should be some much calmer seas going on in the near future, and we'll continue seeing that Bitcoin climb up and to the right. So that's encouraging news this morning. Beneath that one, we have Adam Back, and we're going to get into this story in a little more detail in just a bit. Adam Back backs Switzerland's first Bitcoin treasury company, Future Holdings AG. They've raised already $34 million to buy Bitcoin, so that's a pretty good stash to start. We'll talk more about that in just a bit. And then what else we got here? 3 hours ago, India's first sovereign-backed stablecoin is under development by Polygon. Great. The U.S. government is shut down lasted 36 days. I think the longest shutdown was like 39 or low 40s. So we're getting pretty close to making a record. So Donald Trump can talk about that. Newest record for longest government shutdown. Very exciting. Is it the longest? It's currently the longest. Wow. Someone should tell him so he can make a Truth Social post about it. That's very exciting. And then a little further down, you can see some of the big news of the day. The Democrats swept elections yesterday, and we have new New York Mayor Zohran Mamdani taking the big spot in New York City. I'm sure Trump is not pleased about this. He said he'd rather have a bad Democrat than a socialist or whatever, but looks like Mamdani beat Andrew, I'm not a pervert, I'm Italian Cuomo. You guys should look that up. He was on one of the news stations, and that was literally the Chiron for his name. That's not a big surprise. He didn't win mayor for that reason, and many others, I'm sure. So that's a bit for our time here on X. We're going to take a quick break, but when we're back, we got more of today's top news to talk about. And again, we got two special guests joining us at the top of the hour that you won't want to miss. So all that and more coming up on the Blockchain Report when we come back. All right, welcome back. It's time for more of this morning's bull run. Now, for this next one, I want you to close your eyes and work with me here. I want you to picture this. OpenAI CEO Sam Altman is sitting on stage with Golden State Warriors coach Steve Kerr. They're ready to talk about leadership and innovation, and then suddenly, out of nowhere, some random guy walks up with a subpoena. Welcome to San Francisco, fam, where the Venn diagram of tech drama and basketball wisdom apparently overlaps at legal chaos. Now, the incident went down at the Sidney Goldstein Theater, where Altman and Kerr were joined by Manny Ukatil, a local political candidate and event organizer. So moments after everyone sat down, a man stormed the stage, announced he had a subpoena for Altman, and held up a piece of paper like he was serving a warrant on Judge Judy. Now, Ukatil jumped in front of him, took the paper, handed it off to security, and quickly escorted the guy away, proving that, once again, that AI safety now includes physical safety from humans. Now, Altman and Kerr both looked completely confused by the ordeal, which, to be fair, is probably the same look that Kerr gives when Draymond Green explains his latest podcast take. They're never very good. Now, the event eventually resumed and went on for another hour without incident, because nothing kills the mood quite like getting legally ambushed before the first question. Now, no one knows exactly who this man was or who he was representing or what the subpoena was even about. But let's be honest, with OpenAI's week-to-week legal situation, your guess is probably as good as theirs. All in all, it was the most San Francisco thing imaginable: a tech billionaire, an NBA coach, and a surprise lawsuit all in one night. If they ever adapt this into a Broadway show, they can call it Subpoena Me, maybe. It's a working title. I'll get a better one. Next up, while traditional markets panic over tariffs and elections, one Swiss company is doing what the rest of us wish we could: buying more Bitcoin, of course. Future Holdings AG, also known as Future, just raised $35 million from institutional investors to expand its Bitcoin-focused balance sheet. The company is co-founded by Adam Back. Yes, that Adam Back, the cryptography pioneer whose work inspired Bitcoin's original proof-of-work system. Yeah. So if anyone's earned the right to say stacking sats, it's definitely him. Now, Future's mission is to become Europe's premier Bitcoin treasury company, sort of a digital Switzerland inside of Switzerland, but with more Bitcoin and fewer clocks. Now, its investors include Fulgur Ventures, Nakamoto, and Tobam, proving that even in a shaky global market, serious money is still very much betting big on Bitcoin. The company plans to build a balance sheet-driven platform that helps institutions securely accumulate and manage Bitcoin, complete with analytics, treasury tools, and advisory services. So basically, it's corporate Bitcoin infrastructure for people who don't want to buy memes on Coinbase. Sounds great. Now, Chairman Richard Byworth said that investor demand remains strong even amid market volatility, calling the raise a reflection of confidence in both Bitcoin and Switzerland's role as a financial hub. Vice Chairman Mark Sees summed it up perfectly by saying it's time for Switzerland to lead in Bitcoin. And they might actually mean it. I mean, Switzerland's near zero interest rates and tradition of financial privacy make it the perfect place to build a fortress for institutional Bitcoin holdings. Now, Future isn't trying to trade Bitcoin, they're holding it on the balance sheet like a boss. And the move signals a growing global trend we've been seeing as governments print more money, companies are shifting toward assets that they can't inflate away. Or in simpler terms, while everyone else argues about elections and tariffs, Switzerland's quietly buying the dip. And a new poll says that 70% of Americans think that the Democratic Party is out of touch, which is wild because that's the same percentage of people who think their phone's listening to them, and let's be real, both might be true. The survey, run by a center-left group called Welcome, found that voters think Democrats focus too much on social and cultural issues and not enough on the economy, cost of living, or border security. Or in short, people care about paying rent, not rewriting it in gender-neutral language. Back in 2013, only 51% thought Democrats were disconnected. Now, it's 70. So meanwhile, Republicans improved slightly, going from 70% out of touch to 65%, which is like bragging that you're more relatable. You're the more relatable yacht club, right? So the survey says that voters want Democrats to focus on protecting Social Security, lowering everyday costs, and creating jobs. Instead, they see a party obsessed with protecting illegal immigrants and increasing social spending. And if you zoom out, this isn't just a Democrat problem either. It's a system problem, right? Politicians everywhere, left, right, and whatever Elon Musk is today, are losing touch with everyday people who are tired of watching their money lose value faster than a Dogecoin meme. And that's where Bitcoin sneaks back into this story. It's not left or right, it's an exit, okay? Because when both parties are printing money, Bitcoin's the only one that doesn't lie about inflation. And if you want to know where BTC is actually being used in the US, you can skip the headlines and follow the most underrated alpha source on earth. What am I talking about? Well, of course, the IRS. New data shows that in 2022, 2.78 million Americans reported involvement with crypto on their tax returns. And estimates say about 75% of that activity is tied to Bitcoin. Smart Asset took that data and ranked every state by the share of tax returns that checked the virtual currency box. And the state leading the charge, it's not New York, not California, and it's not Florida, it's actually Washington. In 2022, 2.43% of Washington tax returns reported crypto involvement. That's roughly 91,000 households. And 2022, well, that was the hangover year. Back in 2021, peak mania in Washington hit 6.22%, with almost 234,000 households touching crypto in some way. Washington has led the country in this metric for 3 straight years, making it the quiet heavyweight champ of US Bitcoin and crypto adoption. Now, the broader pattern is pretty obvious once you see the rankings. Crypto participation is highest in the western and coastal states. Utah sits at about 2.36%, California 2.25%, Colorado 2.17%, and Oregon at 1.93% are all in the top 10. So if you have tech hubs, startup culture, high incomes, and overpriced oat milk, and right alongside it, you probably have higher Bitcoin penetration as well. Nationwide adoption peaked in 2021 when Bitcoin went from 32 to around 64K and took half the country's attention span with it. Oof, those were the good days. Now, average adoption across all states was 1.26% in 2022, 3.8% in 2021, and 1.6% in 2022 as things cool off a little bit. A few states briefly crossed the 5% mark in 2021 during that whole mania window before, falling back to more sustainable levels when number go up, stop going straight up. Now, on the opposite side, the South is largely sitting this whole crypto phase out. In 2022, fewer than 1% of households in West Virginia and Mississippi were involved with crypto. Kentucky, Louisiana, and Alabama were all around 1% themselves, and they rounded out the lowest adoption in states nationwide. So the map looks kind of like this. There's more crypto in the coastal, higher income, tech-savvy states, less in lower income, more rural regions. The income breakdown is even more telling. For households earning between $1 and $75,000 per year, crypto adoption averages around 1.3%. It nudges up to around 2% between 75 and 100K. Between 100K and 200, jumps to over 2.5%. And from 200 to 500,000, it hits around 4.5%. And for households earning 500K or more, adoption is nearly 5.5%, rising slightly this year once you cross that $1 million plus in annual income. So higher earners are 2 to 5 times more likely to be involved with Bitcoin and crypto than lower and middle income households. Now, is that about access, risk tolerance, tech comfort, or the ability to hold through volatility without needing to sell to pay the rent? Probably all of the above. The punchline here is that Bitcoin adoption in the US is still early, uneven, and heavily skewed toward richer, tech-connected demographics. And the IRS only started asking about any crypto involvement in 2020, not just taxable events, which means this is basically chapter 1 of the adoption story. The numbers may look small in percentage terms, but remember, these people are voluntarily telling the taxman they own magic internet money, okay? So the real number is probably higher, and still very much growing. We're taking a quick break, but when we're back, more stories, and we'll be joined in just a bit by our two special guests of the day. You won't want to miss it. More on the Blockchain Report coming your way right after this. Wish you could grab cash without selling your Bitcoin? Yeah, same. But hey, that's why Ledden exists. They're the global leader in Bitcoin-backed loans. We're talking over $9 billion worth issued since 2018 with a perfect record protecting client assets. And what makes a Ledden loan different, you ask? Well, with custody loans, your collateral stays put. They don't go full degen and lend it out for yield. There are no credit checks. It funds in under 6 hours. No monthly payments. You can repay anytime with 0 penalties. And for transparency, grown-ups actually want proof of reserves reports every 6 months, verified by a top accounting firm. The bottom line here, gang, is Ledden lets Bitcoin holders unlock liquidity without selling. And you can check them out over at ledden.io/RoxomTV. That's LEDN.io/RoxomTV. All right, it's time for some blockchain without borders. Let's see what's going on in other parts of the world, shall we? Let's do it. So Norway's tax authority is saying that crypto reporting is up 30% from last year, meaning that a record 73,000 Norwegians admitted to owning crypto in 2024. That's about 1 in every 75 people. The total reported holdings top $4 billion with $550 million in gains and $290 million in losses. So basically every Norwegian made money and then immediately gave it back up. The country's tax director says it's gratifying to see more people report their crypto. I mean, of course it's gratifying. Lost Bitcoin doesn't go to the government. It just makes everyone else's stack slightly more valuable. Now, Norway's now requiring exchanges and custodians to report crypto transactions directly starting in 2026. Or in other words, Big Brother is coming for your Bitcoin wallet, but politely and with fjords. Now, here's the kicker. Norway's sovereign wealth fund already holds indirect exposure to over 7,000 Bitcoin through investments in companies like Strategy, Metaplanet, and Coinbase. So, yeah, while they're taxing you for your gains, the government's quietly hodling behind your back. All of which proves one thing. Even socialist Scandinavia knows sound money when they see it. All right, it's time for some Tales from Hodlwood. Let's roll the stinger and see what's going on in Lava. Let's do it. All right, well, welcome back. It's time for some Tales from Hodlwood. Let's see what's going on the streets of Rodeo Drive and all that good stuff down in Santa Monica Boulevard. Well, first up, we got Dr. Phil. His media empire just got the courtroom equivalent of being told, how's that working out for you? As a U.S. bankruptcy judge has ruled against Dr. Phil McGraw in the case involving his company, Merit Street Media, saying that the TV host improperly filed for Chapter 11 to protect himself and handpick which creditors actually got paid. Instead, the case is being converted to a Chapter 7 liquidation, meaning a court-appointed trustee will now sell off the company's remaining assets, including what's left of its media library. Now, the judge said that Dr. Phil deleted incriminating text messages and tried to game the system to pay favored creditors while stiffing the rest. He even called the move an anomaly, which in legal terms is judge speak for "you've gotta be kidding me, Dr. Phil." Now, Phil's camp says that they'll appeal, insisting the court's claims of destroyed evidence simply did not happen. Now, Merit Street had a $500 million deal with Trinity Broadcasting that fell apart after McGraw allegedly failed to deliver the promised viewership numbers and ad revenue. Trinity says that it poured over $100 million into the venture, with some payments reclassified as loans before pulling the plug when Dr. Phil couldn't deliver. Meanwhile, Dr. Phil was already launching a new company called Envoy Media, literally the day before Merit Street filed for bankruptcy. When questioned on the stand, McGraw said he did everything possible to keep Merit running, even comparing himself to the little engine that could. Okay. Unfortunately, the judge decided the engine was out of steam and heading straight for liquidation. Now, the court found that McGraw's loan to Merit Street was conditioned on the company winning its lawsuit against Trinity, meaning that Dr. Phil was basically betting against his own business. And to make things even worse, creditors included professional bull riders who have $181 million in claims after Merit Street allegedly missed media rights payments. They released a statement saying that Dr. Phil tried to skirt his obligations twice, once with the contract and again with a bankruptcy scheme. Or in short, Dr. Phil might need to start taking his own advice. Because at this point, how's that working out for you is sounding more like a closing argument than a catchphrase. We're taking a quick break, but when we're back, we got more news and we'll be joined by today's special guest, so stay tuned. All that and much more coming up on our episode of the Blockchain Report. We'll be right back.
Matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index is collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
All right, welcome back, gang. Now it's time for today's deep dive. And for our deep dive this morning, we're talking about one of the most powerful ideas in all of crypto. That is true financial privacy. And today's guests aren't just talking about it, they are out there building it, creating tools that protect your freedom and make privacy simple enough for anyone to use. So with that being said, I want to give a big Blockchain Report welcome to 2 legends in the space, the unstoppable team behind Cake Wallet, Vikrant Sharma and Seth for Privacy, everybody. Woo! Hey, gentlemen, how are you this morning? Thank you so much for joining us. We and our audience here are clearly happy to have you this morning. How are you both?
Good, good. Thanks for having us on.
Yeah, absolutely. Excited.
Thank you guys. Yeah, we appreciate it, gentlemen. And we got a lot to talk about this morning. And I always like to kind of start where it all began. So Vikrant, I would love to start with you. You got back into crypto way back in 2013, before Coinbase was cool and Bitcoin even had its training wheels. What was kind of your light bulb moment where you went, all right, this isn't just internet money. This might actually, in fact, change everything. What was that process like for you?
Yeah, so I actually jumped into it in 2013, like you said, but I'd heard about it about a year ago in 2012, and it was something in the back of my mind. I mean, I'm a techie at heart. I'm a tinkerer, whatever new stuff is, I like to play with and try to learn about it. So Bitcoin was one of those things. Back of my mind, I thought I got to look into this. And in 2013, I moved to New York City from Florida, and I started hanging out at the Bitcoin Center that was near Wall Street. And it's pretty amazing that early on there was a Bitcoin Center, and I just learned a lot from those guys. And the weird thing is, my jump into Bitcoin was actually with mining. I bought a couple ASIC miners off of eBay, and the guy helped me set it up, and I started mining. I put it in the bottom of our office building, and yeah, what that light bulb moment which you just asked about for me was the word permissionless. Where I can send and receive value without permission from a third party. It seems today everybody seems to forget that very important fact about Bitcoin, but that was what that just drove me in, and I thought, okay, this is it. This is the future. I need to be in this space.
Mm-hmm. Yeah, Vikrant, it sounds like you and I each had kind of a similar foray into it as well, because I was a Bitcoin miner originally too, back a couple years after you. But Your tale sounds very familiar from what I hear from a lot of our guests. It's like you hear about it, but then it takes a little bit of time to kind of really understand it and then see where things are going. And you've been in the space for a while now, so clearly it's worked out okay. And Seth, I want to turn to you for a sec. You, my friend, have become one of the strongest voices in the whole privacy world through your education, your podcast, Opt Out, and now Cake Wallet. So tell us, what pushed you from being interested in privacy to thinking, I'm in fact dedicating my entire life to this? What was that process like for you?
Yeah, I mean, quite honestly, it was a pretty similar journey. I think like most people just got into the space. Also a tech enthusiast, always loved trying new things, and got exposed to Bitcoin in 2011. Like most people, I didn't actually jump on the opportunity then. I was deciding between mining Bitcoin on my desktop PC, GPU mined at the time, or doing folding at home. I was like, folding at home seems more useful. Like having the possibility of helping to cure different diseases seems like a really good thing. This Bitcoin thing seems kind of like a hoax. I don't think it's going to go anywhere. Needless to say, 6 years later, 2017, finally started to understand okay, this is a little bit different. There's something here, but really just grasping it from the sense of I can make some money on this. Me and a few coworkers at the time just kind of viewed it as a penny stock. And it took a while. It actually took me getting into the Monero side of things, which is a privacy preserving, private by default cryptocurrency, very similar to Bitcoin in many ways. Getting into that, the community really kind of took me under their wings and showed me this stuff is only really permissionless and only really powerful for human freedom if there is privacy, if the average person can actually achieve privacy. And that actually is what started me down the privacy rabbit hole. I didn't come into the crypto space being a privacy focused, privacy preserving guy. I had Google Homes all throughout my house. I was a heavy fanboy of a lot of the most invasive surveillance technology of the day. Worked in cybersecurity. My whole job was spying on employees of a company, which is a good thing and a reasonable thing within companies, but is again on the very flip side of the privacy angle that I've taken so far. But it was that moment where I realized I want my work to matter in terms of actually helping people, providing human freedom, not taking human freedom away, or building tools that are being used to take away freedom. And this angle of cryptocurrency, of being able to provide financial privacy in a way that just simply is not possible outside of this, really kind of struck home for me. Because if you don't have financial privacy, a lot of your other rights can be quickly eroded, because if someone can see what you spend your money on, they can learn everything about you. They know what you love, they know what you hate, they know where you go. So if we can reclaim financial privacy and make it something that's actually usable for the average person, that's where we, I think, get a lot of value there.
I love to hear that, because that my Alexa knows way too much about me as is. So I'm glad to hear that there's some options out there, because she freaks me out sometimes. Now, Vikrant, before Cake Wallet, you were a lifelong entrepreneur. So my question for you is what made you decide, what's missing from my life? A privacy-focused wallet that'll I'll constantly be fighting with people on Apple reviews about. What is that about? That's a big undertaking. What was that shift like for you?
Yeah, so I mean, you're right. I've founded and been involved in many different businesses, but like you just described, I hate to use the word journey, but it was definitely a journey. So to continue with my story on how Cake Wallet came to be, so I was mining Bitcoin, then, Coinbase came out, joined Coinbase and joined Gemini and started buying Bitcoin as well, and got to a point okay, this is fun. You do a little bit of Satoshi dice, and you do, what else do you do? You're just hoarding Bitcoin. And I thought, I want to use this. And my wife, and I've told this story many times, I don't know if you've heard it. My wife needed some antibiotics. And, in the US, it's you got to go to a doctor, get a prescription. And she knew what she wanted. And I thought, okay, you know what? I'll tell you where to get antibiotics. I will get it for you from a place called Alphabay, which was a darknet market. And I sent Bitcoin there from my Coinbase account, and they immediately canceled my account. I got an email I basically I pressed send, and I got an email a few seconds later: "We're closing your account. You violated terms and blah blah blah." And that's what got me into more of the privacy space. That was a wake up call. Wait a minute, how did they know? There must be millions, thousands, or I don't know, hundreds of thousands of darknet addresses out there. How did they do this? And that's when I, of course, learned about chain analysis. That was around 2016. Then at that same time, Alphabet had this other weird coin called Monero, and I thought, why not Litecoin or Ethereum or Dogecoin or whatever the hot things were at that time, right? And then I went down another rabbit hole, like I did with Bitcoin, with Monero, about privacy. And again, it just came out of a personal need. There was no iPhone wallet for Monero. In fact, some people in the Monero world thought it can't even be done on the iPhone. And we started building it in 2017 and launched in January of 2018. Then, of course, we added, Bitcoin and Litecoin, Ethereum, and other things, and of course, privacy tools for Bitcoin and privacy tools for Litecoin. So I'm a Bitcoiner at heart who loves the privacy space and loves the privacy coins.
Yeah, no, I mean,
Yep,
that makes
yep.
a lot of sense. I mean, you guys talk about privacy, but you also talk a lot about financial freedom, right? And Bitcoin provides both of those things in a sense. So, Seth, this one's for
Yep.
you. When we talk about financial freedom, like, what does that actually look like to you? Is it a number? Is it a lifestyle? Or just the ability to tell a bank to mind its own business? Like, what does living that actually mean to you?
Yeah, I mean, ultimately, it all comes back to what privacy actually is, which is really just choice. Like, privacy isn't this idea of being fully anonymous, living in the woods, no one knowing you, never showing your face. Like, that's not actually what privacy is. I think that's what a lot of people envision when they think of this word privacy. It seems shadowy, but really, privacy is just you have the choice who you reveal your data to. And with our finances, like, things have so quickly changed when we shifted from the physical world to the digital world. With finances is we went from most people using cash. We went from most people using local banks that they had a relationship with. We went from pretty good privacy overall for the majority of what you do with your money to the current reality where almost no one's using cash. Many merchants don't even allow you to use cash anymore, even though technically they're supposed to have to allow you to do that. There's a whole shift away from that. Most people are using many different banks, credit card companies, all of whom have invasive privacy practices, invasive surveillance practices. So we've gone from this like default that people just thought was the norm of my financial choices are my own and no one else should know about that, to now it's quite the opposite, where everyone knows about it and they're selling that data to marketing agencies. They're selling that data to companies that they work with. And so ultimately, it really just comes down to, like, I want people to be able to choose, do I want to share my financial data with this entity, with this person? And if they have that choice, that's ultimately freedom, because that means that they can, in a situation where maybe they're part of a religion that's being repressed in the country they're in. Many examples of this across the world. China is one that has stood out to me in my personal journey. They can actually buy food for their family without it being known that this person did this and then being tracked, and that ended up coming to bite them. It can do things like, when we have financial freedom, it allows us to properly protest and push back against repressive regimes. A lot of the first things to go in a society that shifts authoritarian is that your ability to actually like organize and get to rallies and get to things like that can be suppressed, because they can shut off your means of payment. They can surveil what you're doing and try to prevent you from doing that. So it's really not like necessarily a number, but it's really giving the power back to you, the individual, taking it away from the faceless corporation, from the government. Not necessarily that all governments are bad, but rather that the individual should have power to be able to choose who sees that data about them. And that it also, it really enables the whole other side. I think a lot of people come to crypto for, where they're like, I want to be able to save money in a way that governments can't debase, that governments can't take away. But a lot of the actual power that comes from that, if you can't spend it safely, disappears quickly. So like, let's say you've been stacking Bitcoin for a decade, but all of a sudden the government says, hey, if you actually want to spend that Bitcoin, you've got to sell it back to us, and then we'll give you dollars for it or something like that. Or you can only spend it at these approved merchants, and you need to be able to spend it somewhere else, maybe to provide it for your family. The power of you actually saving in Bitcoin can be greatly diminished. So bringing back privacy is just kind of one of those core legs that makes Bitcoin freedom money, where you need self-custody and you need privacy. And we're trying to bring those two together at Cake Wallet.
Yeah, no, I love that. And it makes a lot of sense too with you guys being so big on freedom that you're also big on the idea of like an open source world, right? And giving the people the freedom to create new products out of this kind of like template that's available to everybody. So my question is, and this one's for you, Vikram, outside of crypto, how is working in this kind of transparent, freedom-driven ecosystem changed how you think about life and tech, or even just trust in general? Because it seems like it would have to take on a bit of a mindset shift, right?
Yeah, definitely. Coming from an industry, the steel industry, where inventions and things are very well guarded and patented, and then coming to a open source world, you're absolutely right. It was a shift in the mind. I mean, I didn't even know what open source was when I launched Cake Wallet, right? It was launched closed source because I didn't know what it meant. It wasn't any way malicious or trying to hide anything. And the Monero community told me right away what it meant. It means very, very loudly. And I think 10 days or 2 weeks, we revealed everything. We went open source and haven't looked back. Yeah, you definitely have to have a different mindset to be open source. If you just think of it in terms of business and competitiveness, you have to be one step ahead. You have to be always be innovating. You have to be introducing new technology faster than anybody else can. And it's been done. People have forked Cake Wallet and have tried to come out with Cake Wallet clones, as I call them. Or some people have taken part of our code, and that's still live today. It's great. I think we're so early in this space. It's been 13 years already, but I still think it's early, compared to gold, 5,000 years, right?
Right.
That there's still a lot of space in this space, a lot of room in this space for many more wallets, many more exchanges, many more peer-to-peer exchanges, what have you. But you're right; it's definitely a different mindset, but I adopted it very quickly. I mean, I think that's kind of interesting, though, right? I think if we would have launched a Bitcoin wallet first, and that space was, I think, by 2018 was already big enough that you could have remained closed source, and you would have gotten some users who don't know or don't care about open source or closed source. But I think the community we entered in, which is very much focused on privacy and open source, we had to change our ways, and I'm glad we did, of course. And now I'm a big believer in that. If there's another wallet or another system that's not open source, I'm the first one to call them out. So far so good, but you got to be innovating. You got to be coming out with new stuff every day. So it's a
Speaking
good
of
question.
innovating, can we start calling Cake Wallet clones cupcakes? Maybe like, oh, we got another cupcake.
Well, we have a
clone in a
cupcake.
wallet.
We have
You do?
we have a cupcake app. Yeah. Do you know about that?
Amazing. Well, no, you guys beat me to the
Do-
punch
do-
really quick. Tell us what is it?
Oh, okay. So Cupcake is a companion app for Cake Wallet. It's an air-gapped wallet, which kind of substitutes a hardware wallet. Because right now your private keys, your seed is living in Cake Wallet, right? So now you can separate that into another app. So if you have an old phone laying around at home, you have an old Android or iOS device, you just install Cupcake on there, kill your Wi-Fi, kill your Bluetooth, create a wallet on there, and now that's your air-gapped signing device by QR code.
Cool.
So it's good for, and Seth can talk more about that because he's been on some podcasts talking about that and some live events as well, where this is a great tool for, again, for dissidents or countries where crypto is illegal and you don't want to buy a hardware wallet. You don't want to buy Ledger or Treasure because that's going to be known. Okay, hey, you're in crypto. Or you go through security or a border and that hardware wallet's going to stick out like a sore thumb. But if you have two phones with you, nobody knows that one of them's a hardware wallet. Yeah.
Yeah. And
So
I
Cupcake,
want to
check it out.
revisit that in just a bit. Yeah, Cupcake. We'll revisit that. But I want to talk about The entree, of course, we're talking about Cake Wallet itself. So, Seth, this one's for you. Just tell us short and skinny, like what makes it different from the million other crypto wallets that are out there claiming to be the safest thing since wrapping yourself in bubble wrap, right? Like what makes Cake Wallet different? Our audience is dying to know.
Yeah, so
I'm dying to know. I want to hear from Seth on this.
you'll hear the pitch. Hear the pitch. Yeah, I mean, for me, it really comes down to, like we've been talking about, our goal is empowering the individual. It's not empowering us. It's not empowering some corporation. So for us, that comes down to really three main things. Self-custodial, always. We're never going to take custody of your funds. That's not something we're interested in. We want you to be the one who's in charge of your money, because that gives you the most flexibility, the most freedom with that. So self-custody, but making that really easy for the average person. Alongside that, privacy. We've talked about it a lot, just kind of like philosophically so far, but practically that looks like being by far the most popular and most advanced Monero wallet in the space. So if you want the easiest privacy, Monero as a cryptocurrency is you just hit send and you get fantastic privacy. You don't have to do anything extra. But we have cutting edge privacy features for Bitcoin, things like silent payments, which is a reusable address that you can give out to anybody. You don't have to constantly change addresses like people are used to in the Bitcoin space. You can give it to anybody, they can pay you, but it doesn't reveal anything about your wallet to the person paying you or to any outside observer. We also have PayJoin, which is another advanced privacy feature for Bitcoin that it sounds a little scary, but it just happens in the background beautifully. When you go to pay someone else where their wallet supports PayJoin, which wallet adoption is quickly growing. We've already brought it to 1 million users with a Cake wallet, but other wallets in the Bitcoin space are starting to adopt it as well. Basically, just when you go to pay someone who has PayJoin, you'll work together to build a transaction. It's a little weird when you think of how Bitcoin normally works, but you'll both contribute inputs to the transaction. It hides the true sender, it hides the recipient, and it hides the amount in that transaction from an outside observer. And you don't have to do anything extra. There's no like extra time required. There can be slightly more fees depending on exactly how it works out, but you get better privacy by default whenever you're using that. We also have cutting edge privacy tech for Litecoin. And all of these things are really just like a toggle away. It's not like there's some crazy thing. You don't have to go take a 27-hour masterclass to learn how to gain privacy through these tools. You'll open your app, you'll see it right there front and center. You'll choose if you want to enable it or not. And we'll guide you through anything. We do documentation, of course, if you want to dig deeper. But we're trying to make privacy really easy. So self-custody, really easy for the average person. Privacy, easy, not built by nerds for nerds, but built for the average person. And then lastly, really embracing this like multi-crypto world. The vast majority of people are not Bitcoin only. They're not Monero only. They want to use the best tool for the job. And cryptocurrency, one of the most beautiful things about it is you can move freely between different cryptocurrencies very easily. No requirement to make accounts, no requirement to submit like ID or anything like that. Once you're in the crypto world, it's very easy to move around between multiple different cryptocurrencies. So we find a really common use case for our users is they want to save money in Bitcoin. So they're stacking sats, they're saving money to protect their family's wealth long term. They want to be able to pay privately for just regular goods and services that they need. They use Monero for that. And then they want to be able to earn money back or to use stable coins, which are just have massive adoption throughout the world, especially the global south. And so we have the entire Ethereum ecosystem supported as well within Cake Wallet. So really trying to help people to embrace this multi-crypto world, but instead of just repeating a lot of the problems in the traditional financial world of poor privacy and poor user experience, we're trying to fix that, to give people real, usable, actionable tools to take self-custody, to have better privacy, and then to move back and forth to whatever cryptocurrency meets their needs.
Very cool. And this has been quite the journey for you guys, right? I mean, Vikram, you and the team launched back in 2018 as the first Monero wallet for iOS, which kind of looking back seems like a bit of a bold move, especially when Apple wasn't exactly known for loving privacy coins. So I guess the question is, why Monero? Was it just the privacy element to it? And like, what was that uphill battle like getting that into the App Store?
I think not just Monero, but I think just crypto in general is very early for Apple. It took about a month to, back and forth questions on how. I mean, I was basically just teaching them about cryptocurrency in general and blockchain in general, and I thought, forget it. This is not going to get listed. I was ready to give up after like, the 10th email from them. And then, I was sitting at my desk and bling, I got another email. I'm like, oh no, another email from Apple. And then they said, hey, you're approved. So it's definitely a challenge. Like I said, we went back and forth probably around 10 times, probably over 3-4 weeks, I'm guessing. But it worked out. I mean, I think if had patience, explained to them, I took advice from other people as well from the community on how to answer. But yeah, it's definitely a challenge, but we got it through, and I think that did open the floodgates for not only other Monero wallets but other crypto wallets in general. Um, and it's an ongoing battle as well. Every 6 to 8 months, they come back asking the same questions. Maybe they have a different team that reviews it every 6-8 months, but yeah, we have to go through it, and we do, and so far so good. Yeah.
Yeah, and John Q. Public never fully knows or understands like all of the work and the back and forth that goes on building things like this to make it easy to use. And Seth, I know that Cake Wallet's kind of slogan is a piece of cake to use, but you kind of touched upon it earlier. Privacy tech is never really easy. So my question is like, what was the hardest part of making powerful privacy features actually simple for users to use? Because that's really where the challenge is, right? Is how do you turn something complex and make it simple for everybody? What was that process like? Because that seems like a real challenge.
Yeah, I mean, it definitely is not easy. I think a lot of it comes down to, thankfully, we have the flexibility to pour a lot of time into these features. We've been profitable for a long time, so we have the resources to actually say, hey, we're going to dedicate months and months to digging into exactly how does this privacy tool work? What are the current approaches to implementing it? How could it be better from a user interface and user experience perspective, especially? We're trying to take a ground up approach and make sure, again, that we're not just like slapping a privacy feature out there, but trying to make sure, like, for the average user, what does it look like? For like, we have a broad range of backgrounds, people on our team who are deeply embedded in the crypto space or come from a completely traditional background and aren't from the crypto world. So we get to do a lot of internal testing that helps us define like what are the edge cases and issues here. But I think the biggest thing really for us has been we want to make sure that we get these things out to users, but thinking about it from a usability perspective, it's not like a privacy feature that's there in name only isn't actually benefiting anybody. And I think a lot of the approaches to privacy, especially in the Bitcoin space, have been like, yeah, you can do privacy, it's over there, but practically no one can actually achieve it, or only the most technical people can actually achieve it. And I think a lot of that has been because it's been this kind of like nerds for nerds approach, where it's the deeply technical Bitcoin people are building these tools. They're not engaged with other people doing design, doing user interface and user experience. They're not engaged with the regular average person. They're not going to conferences and having these conversations with the layperson in the space. And so they're too detached from the reality of what it is to actually use this product. And they're like, well, I can use it, so it's fine. But that doesn't make it good enough for the majority of people who actually need this. And especially like something that's been fascinating for me is that I've been very involved with the Human Rights Foundation, who have a whole Bitcoin and freedom money kind of arm where they try to give dissidents, to give journalists, to give people who are actually fighting for freedom in really harsh places, to give them technical tools based on Bitcoin and other things like that. And that gives you a whole new perspective, because these are people who are generally not even technical at all, much less crypto native. And yet we're trying to give them the most advanced tools because they're the ones that need this privacy the most. Like, we may have a perceived need, especially in the West. I think a lot of times maybe it doesn't feel urgent, even though it is more urgent than people give it credit for. But that ability to actually have these face-to-face conversations with people using these tools in the wild gives us a unique advantage to build really powerful things that are actually going to be usable by the average person. But it definitely is difficult. It would be a lot easier to just not care and want to do it just for marketing purposes and put the feature out there and not really worry if anybody uses it. But we actually truly want it to be something where everyone can use it. All of our users can access this if they feel that need, and make it really, really easy and straightforward.
If I could,
I love to hear that. I mean, right now, yeah, Vikram, please.
Yeah, I was just going to say, what I always say this: what good is technology if people can't use it? If there's only
Totally.
a small weird set of nerds that are, only they can use it, what good is it, right? Including Monero, including Bitcoin privacy. So we spend equal amount of time, I would say, or even more on the user experience than the back-end tech. Um, that's important for us, right? I mean, and most, I would say,
Yeah.
majority of the cases, we start with the user experience first, and then see, okay, how can this tech fit in? That's going to make it very easy for the users to use. I think we've succeeded in that, especially something complex like silent payments, or even pay join. The user has no clue what happens in the background. All they see is a little slider. That's it. It's a little slider and they're done. They're ready to go use it. They don't have to configure this, that, their server, blah, blah, blah. So that's a really good question. But technology and usability have to go hand in hand. Otherwise, that technology is useless.
Absolutely. And I think Apple has kind of
Yeah.
proven that to the nth degree, right? Like their tech oftentimes seems to be well behind Android phones. Android phones can zoom in like 500x. I think for a while, I think it's like 25x on my Apple phone, but the usability is so much better that people flock to that. So like to your point, how good is the tech if people don't know how to use it? And what I've noticed
Exactly.
too with a lot of wallets, I have some experience myself with these wallets, and a lot of them seem to go one of two ways. It's either they go a little too simple and then they lack the necessary security, or they go too technical and then it just scares the normies off. So my question is, Seth, how do you walk that line between grandma friendly and hacker approved? That seems like a tough thing to negotiate.
Yeah, I mean, honestly, a lot of that again comes down to this idea of like building things from a user experience perspective first. And so we're trying to build something that is we see very commonly at conferences, at events around the world, people are onboarding people to crypto for the first time using Cake Wallet. And we want to continue serving that use case. And you do need to be simple. You need to be very clean. You need to be very minimal for that first experience for someone just getting into crypto. But we also have this passion for these deeply technical, complex, advanced features that not everyone's going to use the moment they get into crypto, but that needs to be available to them. So it's always kind of riding that fine line of how do we greatly simplify the starting point for users, but build something that grows with them. So as they get, they're brand new to crypto, make it very simple. But as they realize actually do care about privacy, there's these extra privacy settings. What do these do? Oh, they have documentation that explains this is why I would turn this on. This is why maybe I don't want to use this. Having more of a guided experience, having a tool that really is built to grow with the user, to not be only for the advanced user, not be only for the simple brand new user, but be something that can meet both use cases is really, really hard. It's incredibly difficult. And I think an example of that is we've been redesigning our UI from the ground up, really for the last 6 months. And it's an intense process because you have to think of so many potential ways that people will use it, so many features that are involved, pairing the advanced with the simple, and all of that work culminates in something that I think can be really good for the brand new user or the deeply technical advanced user. Because I think we really started more with the technical advanced user as our core demographic. When Vic launched this, the Monero community is very technical, very privacy centric, very, very much going to want to get into the weeds of these things. But we've quickly become a go-to for onboarding brand new people. So continuing to try to work on that user interface, that user experience, make it something that's a joy to use, that's simple and minimal when you first get started, but that can grow with you is definitely the target for us.
Yeah, no, that seems absolutely like the smart play, because a lot of these new users don't even know that they're going to need or want these tools in the future, but you guys have seen how that works with past users, so you kind of know how that's going to end up over time. So that's a really smart approach to it. One thing I have a question about, Vikram, is, Seth touched on it.
You can just call me.
But privacy.
It's weird you hearing me. It's weird me hearing my full name. So just Vic is fine.
Vic is fine. All right, thanks, Vic. I appreciate the heads up. All right, so Vic. Something Seth touched on earlier that I would love for you to get into a little more detail about with me is,
Sure.
he mentioned that privacy sometimes can get framed initially as like being shady, like what are you hiding or what are you buying on the Silk Road, right? So my question to you is, how do you flip that narrative and explain to people that privacy is about choice, not necessarily about like secrecy or shady business? How do you communicate that to new people that are using the wallet or interested in potentially using your wallet?
Well, I point to them that they're already doing it with their traditional finance. They're not, when they do a
Okay.
wire transfer, they're not blasting their balance with it. When they're doing an
Sure.
ACH payment, they're not blasting the previous transactions that they've done from that account. So they're already doing it. They're already expecting that type of privacy. So why not expect that type of privacy when spending Bitcoin? And that
Right.
that usually, opens the eyes to them, opens their eyes. Um, I think you can. There's thousands of real world examples. Why do you lock your door? Um, just many things. You can give endless examples of privacy. So when you frame it in that way, then people get it, and you say, "Hey, look, when you're spending your Bitcoin, people can see where you spent from. Not only that, they can go backwards forever to, the genesis block of every Bitcoin." I think when you frame it like that, people get it. And then we talk about the tools. Okay, here's how silent payment protects you from that. Here's how PayJoin protects you from that. Then people get it. Um, and then of course people want to then
Yeah.
investigate other things like Monero or Zcash or other privacy coins. Um, but I think to normies, you have to frame it like that. You have to give them ways that they're already doing it.
I think a lot
No,
of
I think
the
that's
need
smart.
for
Yeah,
education.
go ahead, Seth.
Yeah.
Sorry, just real quick. I think a lot of the need for education on like why privacy matters. I think we're honestly past that point for many people. I think you brought up Apple as a good example of usability before. Apple has been doing massive millions, tens of millions of dollars in marketing specifically focused on privacy because they understand that people want this, they expect this, and people are starting to understand like I don't have to live with poor privacy and invasive companies. There are actually tools available to opt out of this. Signal is another fantastic example. Hundreds of millions of users today that many of them maybe don't have this, like they're not the paranoid individual. All of my friends and family are using Signal. None of them actually have like a deep-seated desire for personal privacy like I do, but they have the innate human desire for choice, for privacy, because we all expect privacy. We've all kind of gotten used to the horrible paradigm that we're in today of surveillance being the norm and a lack of privacy being the norm. But as the tools get good enough, I think people are there, they're ready, they understand they want privacy. It's just felt too hard to accomplish for so long that the tool is getting good enough now that we can say, hey, you want privacy. This is how you can achieve it. I think we're already there. I mean, I think we've seen that at Cake Wallet. Our niche for so long has been this privacy focus, just past 1 million downloads, growing like crazy, revenue growing like crazy, because people want this. There is massive user demand for privacy-centric tooling. They just haven't realized, people haven't realized this is actually achievable today. And that's the switch that's really flipping is they know they want privacy. They don't know how to get it. We're helping to provide that. And anyone else who's going to step in and build good privacy preserving tech is going to benefit. There's a lot of business to be made, a lot of companies to be made in this space, and a lot of companies are already leaning into that, which is fantastic to see.
Yeah, well put, Seth. I mean, we're at this kind of interesting transitional period right now because it's like with social media, everything was out there, and now everything is out there to the world to view. And now people, I think, are kind of turning the other way and saying, wait a second, I don't want everything I've ever done out there for the world to see. So there has been that trend that we're seeing where people are flocking to wanting more privacy in their life so that I can't type in their name and see whatever the hell I want about them. So is that who you guys are actually building for now? Because initially you said you were kind of building it for tech nerds, but now it sounds like more you're kind of running with this new phenomenon we're seeing that's probably kind of emerging after you guys even started this. I mean, even more so where people want hardcore privacy. So who is this built for today? Is this just the people that want to have that type of privacy in their life? Is it mainly for Bitcoiners, or is it just for like the average user who's tired of getting tracked like a lab rat around? Like, who is the person that you're seeing right now sign up for Cake Wallet?
Well, let me just say this first that um, it wasn't built for tech nerds to begin with. It was built to make
Okay.
privacy easy. At that time, it was Monero, of course, only. Um,
Okay.
so it was built to make privacy easy. Right? Back then it was very difficult to use Monero. Mostly CLI
Mm-hmm.
or a very clunky GUI. So from day one, it was meant to be easy to use. I mean, we
Mm-hmm.
even looked at things. How many clicks does it take for somebody to download and then create a wallet and get going? For example, I just wanted that to be
Mm-hmm. Yeah.
5 clicks, things like
Mm-hmm.
that. So from day one, we're focused on ease of use. One of our taglines is "Privacy made easy." So, but as Seth said, sure, in the beginning, maybe there was a small subset of the crypto world that was focusing on privacy. Um,
Mm-hmm.
but as we're seeing, over the years, slowly, as more and more people get into Bitcoin, and more people realize, hey, wait a minute, my transactions are traceable and trackable. That's growing. That privacy need is growing. So who do we target? I mean, like said earlier as well, Cakewell, it's easy enough for you can just get on. You don't have to mess with any settings. You're going to get good level of privacy. But then I think we've
Mm-hmm.
got 300 different settings you can do to get more privacy and more features and blah blah blah. So I would say today we're marketing for Cakewell is for everybody. It's my
Mm-hmm.
father-in-law is 85, uses it, and then we see kids using it. So it's for everybody. Hardcore privacy advocates and who thought they'll never use the iPhone, they love it. So
Mm-hmm.
yeah, yes, Seth, I'm talking about you. And
Felt like a personal attack.
yeah.
We'll
Um,
let you two settle
so
that
yeah,
later.
yeah, No, that's a big
Yeah.
joke within the company because I've converted
Mm.
everyone to the iPhone and Mac OS slowly, but
Well,
but
you,
yeah,
you
it's
talk
it's it's
about
for
it's for
everybody.
right.
Hmm. Yeah,
And
go ahead.
it's
It's
for
for
everybody.
everybody.
That probably speaks to your guys' kind of UX and UI, right? Because most privacy tools that
Mhm.
I've seen look like they were designed by programmers for programmers. But your app actually looks clean and sleek. So, Seth, what was kind of the design philosophy behind that? Because it is incredibly user friendly.
Yeah, I mean, I'm like Vic said from the very beginning, the goal has been to make it very simple, very easy to use, very approachable. Because like even if like that initial audience was mostly technical, because Monero was pretty niche at that point, it wasn't that the app was built by programmers for programmers. And I think a lot of the value has come from like Vic having an abnormal like startup CEO perspective where he's coming from completely outside the industry and he just had a personal need of like, hey, I want privacy. It's too hard to use. How do we solve that? I'll solve it myself. And so it I think has
Right.
given us a very different perspective where if you look at the rest of the Bitcoin and crypto space, the vast majority of wallets, the vast majority of companies get started by these like in the weeds, highly technical people who have been in Bitcoin, been in crypto, like from a development perspective for a decade. And they're so out of touch with the needs of the average user that it makes it very hard for them to build
Right.
something from the ground up for the average user. So, I mean, when it comes to the design philosophy for us, it's I think a combination of wanting to make things really simple and minimal. We don't want it to feel cluttered or like overwhelming when you first open the app or when you first get started. So you're like, okay, I don't even like, what am I going to do here? Like, what's the next step? We want to make it straightforward, but also like we want to make privacy fun. Like a big part of our brand that we've leaned into harder and harder over this last year is like Cake and Cake Wallet is a really fun brand, and privacy is not for these super shadowy individuals. It's for the average person. It's for the kid. It's for the grandma. Let's make it fun. Let's give some joy in the usage process. Let's make people actually want to open their crypto app and use it, and not be like, oh God, I have to touch crypto again. Like, what am I going to do here? We want it to be something
Yeah.
that's fun, that's visually engaging, that's beautiful to look at. Take a lot of cues. I mean, Apple I think is very good at this, at making complex things very approachable and achievable and beautiful. So I think taking a lot of nods from them, but trying to obviously do our own spin on it and lean into the cake brand, lean into bringing joy to this idea, lean into simplifying privacy, simplifying self-custody for the average person.
Yeah, even the name Cake was chosen for that. I was just saying, even the name Cake was chosen for that because everybody loves cake.
Mm-hmm. They sure do. You guys have a tagline probably in somewhere in there that's like, have your cake and know how to use it too, because you guys are making the privacy industry a lot more user-friendly for the average person, which is pretty amazing. Mm-hmm. And you guys already have these amazing features, and our time is running a little short here, Vic, so this one's for you. Can you give us maybe like a sneak peek? Like what's something new you and the team are building or experimenting with right now that you are genuinely excited about?
The biggest feature we're working on right now is Bitcoin Lightning. We are super excited about it. I mean, it feels like a relaunch. It's going to be great. I'm personally excited about it. I know Seth is excited about it. Seth has done a lot of research before choosing the route we went with. We went back and forth, debated a lot. We hope to have that out by, I don't know, at mid-December, hopefully. So we're quite excited about it. Yeah. So, a multi-currency wallet focused on privacy with Lightning. I think it's going to be it should make an impact in the industry. I'm very excited about it. So look for that.
Yeah, no, I'm certainly pumped up about it. I'm just hearing about it. So I'm sure you've got a lot of people in our audience today that are like, this sounds like my cup of tea. I'm ready to live in a more private world. So Seth, people in our audience, they're interested in Cake Wallet. They want to learn more. What's the best place I can send them to get more info?
Super straightforward, cakewallet.com. We'll have all the info that you need about the app, download links, link outs to our social platforms. We're on X as well, and pretty much every social platform at Cake Wallet too. So that's going to be the best place. I mean, you can also just open up your app store. We're on Android, we're on iOS, we're on desktop as well. So trying to make it really easy, like we talked about, cakewallet.com. You'll find everything you need there.
Amazing. And both you and Vic have such great takes. I'm sure our audience would be interested in learning more about your presences on X/Twitter. So where can they find you guys if they want to hear what's going on in your day-to-day?
Yeah, so I'm just at Seth for Privacy on X. That's the only real social platform I'm on. I do have a blog at sethforprivacy.com and a podcast at optoutpod.com, but my time's mostly consumed by good Cake Wallet stuff these days. So not podcasting too much on my own.
What about you, Vic?
Just once a week, right? Yeah, my Twitter or X is Vikrant NYC, Vikrant NYC. So reach me there. I'm very active. I get myself in trouble there a lot, so
Well,
he's a resident leaker, so
Amazing. Well, gentlemen, thank you so much for taking the time to join us today and lend your insight and expertise. It's really amazing to see what you and the team over at Cake Wallet are doing. And anytime you got a new feature you want to announce, come on the show. We'd love to have you back to chat about it. We'll be looking for the new Lightning feature come December, guys. So thank you so much for joining me, and I hope you enjoy the rest of your week.
Thanks for having us on.
Thanks so much for having us.
Thanks, guys. Cheers. Pleasure is all mine. All right, we're taking a quick break here at the Blockchain Report. When we're back, we're going to wrap things up with a little bullish, bearish, or BS, so stay tuned. We'll be right back after this. All right, boys and girls, welcome back to the Blockchain Report. Another big thanks to Seth for Privacy and Vic from the Cake Wallet team for joining us today. Go check them out at Cake Wallet. Some good stuff over there. But right now it's time for bullish, bearish, or BS. This is the part where we wrap up today's show with a recap of our top stories and see how things are looking for Bitcoin. Let's do it. First up, Democrats scored a clean sweep across the East Coast. We're talking Virginia, New Jersey, New York, turning election night into a political blue wave. Trump-backed candidates stumbled hard, even with Andrew Cuomo losing again to Zoran Mamdani in the New York City mayoral race. The results are being read as an early referendum on Trump's second term and a sign that voters are feeling the pinch of affordability more than ideology. Ooh, I'm feeling bearish on this one. Markets hate uncertainty, and a strong Democratic wave signals higher regulation, more spending, and more political volatility heading into 2026. If this trend continues, it could strengthen the dollar short term, but push long-term investors toward Bitcoin as a hedge against partisan chaos. So near-term pain, long-term gain, but for now, the headlines leaning bearish for Bitcoin's price action. Moving on, our next story, Bitcoin is officially in a bear market. It's down more than 20% from its high after Goldman Sachs and Morgan Stanley warned that global stocks could drop 10 to 20%. A historic $30 billion liquidation recently nuked long positions across exchanges, leaving traders clinging to their leverage like it's a flotation device. Now, Wall Street's feeling a little nervous, and risk assets everywhere certainly seem to be catching the flu. So I'm going to call bearish on this one too, gang. And short-term sentiment seems to be shot. Institutions are pulling risk off the table, and that always drags Bitcoin with it. But long term, these are the conditions where Bitcoin eventually shines. When traditional finance starts wobbling, sound money looks better by comparison. Still, we can expect more pain before any gain. The market is in full panic mode right now, so I'm feeling bullish. Last up, we got Dr. Phil's $500 million media startup, Merit Street Media, just got liquidated after a judge ruled he tried to game the bankruptcy system. He deleted text, he prioritized favorite creditors, and even compared himself to the little engine that could. Unfortunately, the court decided that it couldn't. Now the company's assets are being sold off while creditors, including professional bull riders, are demanding over $180 million. My verdict on this is just a bunch of bull. I mean, celebrity drama with zero market impact, unless of course you were long on talk shows or something, but I don't think Polymarket even lets you bet on that. Still, it's another example of mismanagement and debt addiction in corporate America, the kind of thing that makes Bitcoin look sane by comparison. So while it's fun gossip, it's a non-event for any kind of price movement. So today's final diagnosis, we got 2 bearish, 0 bullish, and 1 BS, which unfortunately means today is a bearish day, gang. I mean, between political turbulence and Wall Street jitters, today's sentiment is heavy. Bitcoin sitting at around 103K, trying its best to find its footing while the world freaks out about elections and equity corrections. It's one of those days where everything looks red, which usually means smart money's quietly buying green. Well, that's a wrap for today's show, gang. As always, thank you so much for tuning into another episode here at the Blockchain Report. If you haven't already, it would mean so much to us if you did the thing where you like, follow, and subscribe to RoxomTV, the Blockchain Report, and me, and Hank at RoxomTV on every platform, everywhere. And I will be back tomorrow, same time, same place, same chaos, right here at the Blockchain Report. And until then, as always, stay safe, stay informed, and always hodl on. See you tomorrow.